Hey everybody, wanted to jump on here, give you a quick market update for the month of October in the Twin Cities region. Halloween's right at the end of the month, Thanksgiving's right around the corner, so is Christmas, winter's coming. So let's find out what the real estate market is doing in the Twin Cities region. New listings are down 8.9% year over year, as well as being down 2% month over month, with about 7,000 homes sitting on the market or coming on the market. Closed sales are down 22.9% year over year, while being down 2.6 month over month. So it's getting a little bit more difficult to get to the closing table. So you really have to actively look for a great listing agent in order to get you to the closing table, so you can sell your home or get into a new home. Months of supply is sitting at about 1.4 months, so we're still in that seller's market. However, there's a couple other indicating factors. If you think about the market as a pendulum, it's starting to swing more towards a balanced market. If you take the last 21 and 2022 years and throw them out the window and kind of connect to 2019, what was happening then, that's what we're projected to do. So expired listings are up month over month by 32.5%, 713 homes having expired in the last month. Home prices, being that we're still in that seller's market, are up by about 7.8% year over year. They are teetering a little bit above month over month by about $3,000. We're sitting at about $416,861. If you're thinking about selling, it's still a great time to do so. If you're not thinking about selling, but you wanted some free extra cash, think about getting a HELOC loan. Appraisers are taking the last 6 months of comparables, so you're projected to get probably the most amount of money for your HELOC loan that has kind of been in recorded history. So average showings are down by 16.2% year over year. We're sitting at about 7.4 showings per listing. So last year we were sitting at just above 9. So that's kind of what's happening in the real estate market today. If you have any questions, contact me. Give me a call at 651-271-7472. I'll give you a free 15-minute market analysis, show you the equity that you have in your home that you could pull in the sale of your home. But make sure to stay here. We have a quick clip from a Zoom call that I did with our number one lender, Matt Minder, to give us some insight on what's happening in the lending industry with the rising interest rates. So let's get into that, find out what's happening. Okay, well, going off of that, describe to us, who are you? How long have you been in the industry?
Do I have to say, Ben?
You don't have to get too into detail.
All right.
But yeah, I guess we should find out who you are and what you do.
So Matt Minder with New American Funding. Been doing this mortgage thing for about 31 years. And I love it. I love educating people as far as setting themselves up to succeed. I think home ownership is the foundation to a good financial portfolio for people, as far as having a well-balanced finances for themselves. And I think there's really solid ways to do that, and to incorporate the purchase of a home and doing it the right way, and really having discussion on making sure it fits their wants and needs and their goals, I think is important.
Oh, wonderful. Thank you, Matt. Now we'll go into the questions. We'll edit that first part out. In 30 seconds or less, what are you seeing happening in the industry?
Yeah, and so it's slowed down. Again, purchase business is slower. Not a lot of refis at all. Rates are, last week we probably hit a 14-year high in interest rates. Now, since then, though, there's been pullback where, last week we were maybe close to 7, and this week we're at like 6.625 on a conventional fixed rate mortgage. And so lots of volatility, let's say it that way, things moving around quickly.
Yeah, wonderful. So you touched on interest rates. You said they're at about 6.625?
Correct.
Right now. What are you seeing happening with those? Are you projecting they're going to go up more? Are they just going to kind of sit where they're at before they come down? Touch on that a little bit for us.
Well, it's tough to project, so that's a wild card. Yep. If you think about it, last year we were probably about 3.5%, 3.75 maybe. So we're 3% higher than that in 12 months, which is kind of unheard of in the last 25, 30 years almost. And so there's many people who are projecting that we're going to be in the 4s sometime next year. Okay. I think in another month, we will probably get some sort of direction because of the election to see whether or not we're going to maybe level out, again, level out, improve, or go up.
Yeah.
Lots of the projections, though, like a long-term forecast over the next 30 days or so, predict a little bit higher rates. But also, we didn't see that there was going to be this pullback this past week. That wasn't expected.
Mhm. Okay. How is this affecting affordability right now?
You know what? I took a look at some numbers that I had, and if you were to buy a home and had a mortgage right around $400,000 or so, I would say that the difference in payment, principal and interest payment between, let's say, 6.5% and maybe a high 4, so about a 2% difference, is probably around $300. And so, there's lots of people that might say, hey, I can't afford that, or I have to look at a lower priced home. But I think that many people, when we sit down and really look at their budget, look at their situation, we can find ways to make that comfortable. And my first question with clients is always to say, hey, what's your comfort range for a payment? And then we don't necessarily have to watch rates, but try to keep it in that payment.
Yeah. Good. Are there any, going off with the rising in interest rates, are there any programs that you're offering to first-time home buyers or just buyers in general?
You know what, there's a couple of different ways to maybe offset the cost of rates going up. And Ben, I'd be interested to hear your opinion on this. So as an example, if maybe the market is shifting a little bit and we're starting to see that homes are sitting on the market or maybe not getting the full price or maybe not getting 20 offers, is there an ability to get a seller to pay any concessions? What's your thoughts?
Yes, right now we are starting to see a lot less offers on homes, which gives the power back into the buyer's hands on negotiating different items such as repairs on inspection items, or even, like you said, seller concessions to help finance the buyer in.
So with that in mind, you could say, well, if we could get some seller concessions, perhaps we could pay points to get rates lower. What's interesting right now is that there is, that will fluctuate every day, but we're starting to see some really nice return where, like yesterday, I locked a rate where just with 1/4 point, we dropped a rate 1/4%, which is a huge, huge change. And our break-even point on that was about 11 months, which is not bad at all.
Okay. Matt, do you have any idea right now on buying down points, how much it costs?
Yeah, so again, that fluctuates every day. And so whenever I have someone who is ready to lock in a rate or has an accepted purchase agreement, we take a look at the pricing that day and really take a look and say, hey, does it make sense to do this or doesn't it? And so sometimes I hesitate on that because let's say if you had to pay over 1 point or 1% of your loan amount, the buyback, I did this just yesterday for someone, and the buyback was about 50 to 55 months where that they were going to break even. And so then the big question is to say, are you going to be in that home that long? Or do we think rates are going to improve significantly enough that we can refinance you to a better position in that time period? And so, let's say you paid 1 point on a $400,000 loan or $4,000, and then you refi just 2 years later. That's kind of not the best use of money. And so, again, it's a case-by-case scenario that we absolutely look at pretty deeply.
Wonderful. Well, Matt, I appreciate your time. I think it helped a lot of unanswered questions or uncertainty in the market. Is there anything that I didn't ask that you wanted to touch on?
You know what? One of the questions I get quite often, Ben, is, I'm not thinking about buying till next spring. How about we get things started in like January? And I say, you know what? It's never too early to start. So as an example, I met with some people yesterday and they are in great position, but I saw some spots where we could maybe improve their credit score. And if we did that, let's say a month or two ago when we first started talking, maybe they'd be in a little bit better position. So it's never too early to start.
Wonderful. Wonderful, Matt. Is there anything else?
No, I think it's great. One, I would tell people to talk to Ben because he does a great, great job. And one thing I know about you as well as myself is, we really, really love helping people in this market to, again, start that foundation of home ownership and some financial foundation.
Yes. Well, thank you so much, Matt.
Yeah,
Thank you for the time. I will leave your email down in the comments. So people who are looking to get themselves financed and ready and pre-approved, they can reach out to you. So
great. Hey,
thank you
thanks,
so much,
Ben. I
Matt.
appreciate it. Yeah,
Of
take
course.
care. We'll see
Thanks.
you.
Bye-bye.
Okay, bye now.